Hi, good morning, good morning, good morning. Am I audible? Good morning, am I audible? Yes. Okay, fine. So, we can start, right? We can start. Yesterday, we were discussing about the departmental accounts. In departmental accounts, we learnt why the departmental account is required. And later, also we learnt what are the different methods of maintaining the books, right? Where separate set of books can be maintained as well as separate set of books cannot need not be maintained. Okay, so when it is separate set of book is maintained, whole business thing is split into departments. Each department maintain its own books which records its own income, own expenses. Whereas where separate set of book is not maintained, their organization will maintain the whole records, whole transaction, all the department transaction. Later it would be split into department wise, right? So we will prepare a departmental trading account to find out a gross profit or loss from the department. Later we will find out a departmental P&L account. In P&L account also we will give the entry for the stock adjustment if any, right? Unearned income will be there, no? Unearned income, because stock, when it is transferred from one department to other department, in other department stock is of the one department which is internal itself, which is our business itself, which is our department itself. So that is actually unearned. So what we will do, we will eliminate it by transferring it into stock reserve. The adjustment will be given in the P&L. There are certain expenses and incomes where such expense or income cannot be allocated easily from two departments, different departments, like pure finance expenses and all, bank interest, bank charges, etc. So that what we will do, sir, that we will for allocating those expenses, or not to allocate, just to write off those expenses and incomes which cannot be allocated to the departments. And also to find out the whole organization net profit or net loss, we will prepare something called general P&L account. We will prepare something called general P&L account. Yes, fine. So we can straight away, I think, can proceed to the illustration, right? Shall we proceed to the illustration, guys? Shall we? Hello, guys. Yes. Go through the question, people. Go through the question. Kindly go through the question. Read the question. Okay, listen here. Measure unique is a departmental store having 3 departments. How many departments, sir? 3 departments. Which are the departments? X, Y and Z. X, Y and Z. Information regarding 3 departments for the year ended 31st March 2022 are given below. Okay. Opening stock. In the department X, opening stock was 72,000, Y 48,000, Z 40,000. Furniture, X 40,000, Y 40,000, Z 20,000. Purchases, X 264, Y 176, Z 88. Sales, X 360, Y 270, Z 180. Closing stock, X 90, Y 35, Z 42. Sundry debtors 30, 20, 20. Floor area occupied by each department in square feet. X occupied 6,000 square feet, Y occupied 5,000 square feet, Z occupied 4,000 square feet. Number of employees, X 50, Y 40, Z 30. Electricity consumed, X 600 units, Y 400 units, Z 200 units. Okay. The balance of the other revenue items in the books for the year. Charges inward, total 6,000. Carriage inwards, total 6,000. Carriage outwards, total 5,400. Discount allowed, total 4,500. Advertisement, 5,400. Wages, 96,000. Discount received, 3,600. Employees welfare expense, 4,800. Rent, rates and taxes, 15,000. Electricity charges, 6,000. Depreciation on furniture, 2,000. After providing provision for bad debt at 5%, prepare a departmental trading and P&L account. Okay, fine. These are unallocated expense and income. These are the allocated expense and income. These are unallocated. These are allocated. Fine. Just to go through the question. Just quickly go through the question. We'll start. Fine. So what we should do, sir? Simple. We have to prepare a trading account. We have to prepare a P&L account. That's it. We have to prepare a trading and P&L. Trading P&L together. Okay, sir. Done. Let's prepare. See, there are 3 departments. Okay, X, Y, Z. There are 3 departments. So. There are 3 departments, so we need 3 amount columns. Okay. Better in examination you turn the page into landscape mode. I don't know which is landscape mode, which is portrait mode. Just don't write normally, just turn it and write, so that it saves your time. Otherwise, when we try to write it in a smaller area, no, it takes hell lot of time waste in the examination. Trading P&L account. Departmental trading P&L account. Departmental trading P&L account. Yes sir, shall we start? Yes sir, we can start. First there is a opening stock 72, 48 and 40. Give me a second. Give me a second, okay. To opening stock, how much was the opening stock? Opening stock was 72, 48 and 40. 72,000, 48,000 and 40,000. This is opening stock. Done. Next, what is there? Next, there is a purchases. 264, 176, 88. Two purchases, 264,000, 176,000, 88,000. Okay sir, done. Next is what? Next there is a sales. Next there is a sales. Buy sales. Buy sales 360, 270, 180. Buy sales 360, 270, 180. By closing stock. By closing stock 90, 35, 42. $90,000, 35,000, 42,000. Okay, done sir. Anything else relating to the trading account? Sundry debtors, floor area, number of employees. There is a carriage inward. Right? But it is for the whole organization. We don't know how much it is. But carriage inward will be on what? carriage inward is incurred on purchased goods. No, to get a purchased goods into the factory, we are incurring certain expenditure called carriage inward. Now, if we want to split a carriage inward into each department, of course we can split it on the value of purchases. No, carriage inward could be done in the value of purchases. So we can do that statement which shows allocation of unallocated. Working note number 1. Statement showing allocation of unallocated income and expenses. XYZ also total amount, also ratio in which we are going to allocate, also basis of the ratio. Particulars, basis, total or a ratio. Give me a second. Ratio, total, x how much, y how much, z how much. In the, under that, the first one is what? First one is carriage inward. First one is carriage inward. Carriage inward is basically incurred on the purchased goods. Incurred on the purchased goods. So the basis will be what? How we can allot? We can allot on the value of the purchases. So basis is purchase. Basis is purchases. How much was the each purchase of each department, guys? These people, X purchased 264, Y department purchased 176, Z department purchased 88. So 88 into 2 is 176 and plus 88 will become 184. I think it is 3:2:1, right? The ratio is 3:2:1. Everything can be divided by 88. Everything can be divided by 88. Right, purchases. So the purchase ratio is 3:2:1. Total carriage inward is how much, sir? Total carriage inward is 6,000. Total carriage inward is 6,000. If we allocate 6,000 to XYZ in this ratio, carriage inward will be how much? 3,000, 2,000, 1,000. So here in the carriage inward, 2 carriage inward, 2 carriage inwards, working note 1, 3,000, 2,000 and 1,000. Just tell me whether it's clear or not. Whether this is clear or not, allocation thing. Hello, people. It is clear? Is it clear, allocation? Yes, okay. Next, what is there, sir? Carriage outward is there, P&L item, advance, discount allowed, P&L item, advertisement, P&L amount. Wages is there, 96,000. Wages is there, 96,000. So, actually they have given number of employees, right? number of employees 50, 40 and 30. Two wages. Working note number 1. We are going to allocate wages. Basis is number of employees. If the number of employees was not there, what would be the next one, sir? It might be depend upon the cost of goods sold. What is cost of goods sold, sir? Opening stock plus purchase minus closing stock. Okay, fine. How much is the total? Total is 96,000. No. What is the ratio? Number of employees ratio 50, 40 and 30, which is basically 5:4:3. 5:4:3. How much is the total amount of the wages? Total amount of the wages is 96,000. So 96,000 divided by 12, which will come to 8, right? So 8 into 5,000, 8,000 into 5 will come to 40,000. 32,000, 24,000. 96,000, 40,000, 32,000, 24,000. 40,000, 32,000, 24,000. Tell me, is there any doubt in this? Tell me, is there any doubt in this? No. Okay, fine. Next, let's see any item are there. Discount allowed, advertisement, wages is done, discount received, P&L item, employee welfare expense, P&L item, rent, rate and taxes, P&L item, electricity charges, P&L item, depreciation on furniture, P&L item. So we can find out a gross profit X, total 4,50,000. This side there is no way there it is touching to 4,50,000. So there is a gross profit. There is no hard and fast rule that if one department shows the gross profit, the other also should show the first gross profit. Okay, one department might show the profit, other department might show the loss. So department wise we have to compute. 3,60,000 plus 90,000 will come to 4,50,000. 2 GP balancing figure. Debit how much? 72 plus 3,000, 75,000, 75,000, 79,000, 79,000, 139,000, 339,000, 379,000, 379,000, 21,000, 50,000, 71,000. Gross profit is 71,000, right? I think so. Sure, give me a second. I don't know, my tab is acting weird. 450 minus 72 minus 264 minus 3 minus 40 71. Okay, done. Next, if we compute y, 270 plus 35 will come to 305, right? 305,000. So 48,000, 50,000, 50,000 plus 176. 48 plus 176 plus 2 plus 32. 258 minus 305. 47,000 is a gross profit of department Y. Yes, sir. Next, 180 plus 42, 222,000. 40 plus 88 plus 1 plus 24 minus 222, 69,000. 69,000. Okay, sir, done. What is this, sir? This is your gross profit. So by gross profit brought down 71, 47, 69,000. 71,000, 47,000, 69,000. Okay, sir, done. Anything else, sir? Now we are going to make P&L items. Opening stock, furniture, purchases, sales, closing stock, sundry debtors, number of employees, electricity consumed. Carriage inward is done. Carriage outward is there. No, carriage outward is there. To carriage outward. Yeah, wages, revenue items. It's there, no? It is there here, no? Wages 96,000. Other revenue items. Right? What's the issue? I'm not getting. No. Wages usually will be relating to the manufacturing, no? Wages usually will be relating to either manufacturing or direct, no? If it's a salary, it would come in the P&L. As it's a wages, it's better to take in the trading account. I know they have taken it in a P&L account, but we will give a note. We will give a note for it at the end of the answer. Okay? What our assumption is. Fine? Yes. Fine. Carriage outward 5,400 is there. working note 1. Carriage outward. Carriage outward usually will be incurred on what? Incurred on the sold goods, right? The sold goods which we send to our customers. Basically, it's kind of marketing activity. If you purchase some electronics, they will send electronics to your home, no? If it is there in certain radius for free, that is carriage outward, that expenditure. How much we have incurred? We have incurred 5,400. So, carriage outward on what basis, sir? It should be on the sales basis. Sales basis. What is the sales ratio? It is 360, 270 and 180. So I think everything can be divided by 90, right? So 2 it is, here it is 3, here it is 4. So 4 is to 3 is to 2. Sales 4 is to 3 is to 2. 4 is to 3 is to 2. How much is the total amount? Total amount is 5,400. 5,400. 5,400 divided by 9 will give you 600. So 600 into 4 will come to 2,400, 1,800, 1,200. 2,400, 1,800, 1,200. Carriage outward. $2,400, 1,800, 1,200. Okay, done. Next, what is there? Next, discount allowed is there. Discount allowed. To discount allowed, working note number 1. So discount for whom you will allow? For your debtors. Your debtors will be on what basis? Your debtors will be on your sales basis, right? Your debtor is going to be on your sales basis. Fine. So you are going to allocate discount allowed on a sales basis. See here. Bad debt, discount allowed, etc. on sales basis. Four is to 3 is to 2 is the sales ratio, and how much it is? How much is that? 4,500, right? 4,500. 4,500 divided by 9 will come to 500. 500 into 4 will be 2,000, 1,500 and 1,000. So discount allowed 2,000, 1,500 and 1,000. 2,000, 1,500 and 1,000. 4 is to 3 is to 2. Okay, discount allowed is done. Next there is a advertisement. Next there is a advertisement. Usually advertisement you are going to make a sales. So of course we are going to allocate that upon the sales ratio. More and the assumption is more and the advertisement, more and more the advertisement, more and more the sales. So advertisement sales 4 is to 3 is to 2. How much is the advertisement cost? It is 5,400. 5,400. So it is 2,400, 1,800 and 1,200. 2,400, 1,800 and 1,200. Okay sir, advertisement is done. What is next? Next is discount received, which is our income, by discount received. Again working note number 1. Again working note number 1. Sir, who will give a discount? Discount will be given by creditor. How he will become our creditor? Because we purchase from him. So it is going to be in the purchase ratio. Discount received will be going to be in the purchase ratio. Basically these are the cash discount. Okay, is allowed is also cash discount, received is also cash discount. If it's a trade discount, it would have come in the, it would have already got adjusted in the purchases and sales. Trade discount always gets adjusted in the purchases and sales. Your purchase and sales figure is after adjustment of the trade discount. If it's a cash discount, it will come in your P&L. So purchase ratio, and purchase ratio was 3:2:1 as computed earlier. 3:2:1. So how much is discount received? Discount received is 3,600. So 1,800, 1,200, 600. Yes. So it is 3,000, 1,800, 1,200 and 600 is what the discount receipt is. Next is what, sir? Next there is a employee welfare expenses. Employee welfare expenses. Actually, it should be given on a salaries, okay? Employees welfare expense, if any, it should be allocated on the salary, because the guy who earns 1 lakh rupees salary and the guy who earns 10,000 rupees salary, both will not get the same level of employee benefit. The guy who earns more, he will get more. The guy who earns less, he will get less. But as the salary is not available, here for this particular purpose, we can go for number of employees. If the salary was available, we would have gone for that only. So it is number of employees. Number of employees. This 5:4:3. How much it is? 4,800. 4,800. That is 5 plus 4, 9, 9 plus 3, 12. 4,800 divided by 12, 400. 2,000, 1,600, 1,200. 4,800, 5:4:3, 2,000, 1,600 and 1,200. So 2 employee benefit expense or discount we didn't write. It is 1,800, 1,200, 600. Two employee benefit expenditure, working note number 1. How much it is? 2,000, 1,600 and 1,200, right? Total is 4,800. Done, sir. Employee benefit expense is done. Next is rent, rates and taxes. Rent, rates and taxes. Listen very carefully. Rent, they are telling. Rent. Rent will be paid on what? Rent will be paid on the place how much you occupied. So is there any related item is there? Yes. There is a floor area occupied by each department. Floor area occupied by each department. So, sixth one, rent. Basis is floor area. Basis is floor area. And how much is a floor area? 6,000, 5,000, 4,000. That is basically 6:5:4. 6:5:4. Total is 15. Total is 15. How much is a rent? Rent, rates and taxes 15,000. Okay. Pretty simple then. 6,000, 5,000, 4,000. 6,000, 5,000, 4,000. Okay, done, done, done. Next, electricity charges of 6,000 is there. Two electricity charges. Again, working note number 1. Electricity. They have only given electricity consumed by each department 600, 400, 200. Basis on consumption. Basis on consumption. What is the ratio? 600, 400, 200. There is 3:2:1. 3:2:1. How much is the expense of electricity? 6,000 is the expense. So 6,000 divided by 6,000, 1,000 into 3, 3,000, 1,000 into 2, 2,000, 1,000 into 1, 1,000. Okay, sir, done. Done. Electricity is done. Next is 7th one. Depreciation on furniture. Depreciation on furniture. They have given the value of furniture. So upon that only we can allocate, right? Because what else you can do? Furniture they have given 40,000, 40,000, 20,000, which is 2:2:1. 2:2:1. So how much is the depreciation they are telling? Depreciation, 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 2,000 they are telling. 2,000 divided by 5 will come to 400, 400 into 2 will come to 800, 800, 400. 800, 800, 400. Okay, sir. 800, 800, 400. So electricity, how much was it? Electricity, it was 3:2:1, no? 6. So yeah, it was around 3,000, 2,000 and 1,000. Electricity was around 3,000, 2,000 and 1,000. Done. Next was what? Next was depreciation. 2 depreciation on furniture. 2 depreciation on furniture. Working note number 1. Total depreciation was 2,000 and here the value of asset was 2:2:1. So 400, 400 into 2, 800, 800, 400, right? 800, 800, 400. 800, 800, 400. Now we can find out a net profit or net loss. We'll see. So 71,000 plus 1,800 will come to 72,800. So 72,800 in the credit side. Let's check in the debit side. 2,400, 4,400, 4,800, 6,800, 8,800, 14,800, 17,800, 17,800, 18,600. So 2 net profit. It is 18,600, no? 18,600, which means 1,400, 1,400 plus 52,800. 53,200, 54,200. $72,800 minus 4,400 minus 4,400 minus 6,000 minus 3,000 minus 800. 14,600 it is. Somewhere we missed something, no? So, oh, there instead of 4,400, we have given it as 44,000. So 54,200 it is, right? 54,200 rupees. 54,200 rupees. Yes, sir. Done. Here it is 47,000. 47,000 plus 1,200 will come to 48,200. 48,200, 48,200. So it is 1,800, 2,300, 3,300, 3,300, 4,100, 5,100, 5,100, 5,700, 6,700, 6,700, 11,700, 13,700, 14,500. So 14,500 minus 48,200, which will come to 33,700. 33,700. Okay, sir. Here it is 69,600. 69,600. 69,600. 1,200, 2,200, 2,200, 3,400, 3,400, 4,600, 8,600, 9,600, 10,000, 10,000, 59,600. 59,600, right? $52,700, $37,700, $58,600. 54. Why we are getting 2,000, 3,000 more? Wages we have adjusted. Okay, 40,000, 32, 24. Closing stock it is 90, 35 and 42. 3 lakh 60, 4 lakh 50. Okay, 4 lakh 50 it is. Okay. Here debit side it is 72,000, 2 lakh 64,000, 3,000, 1 lakh 11,000, 3,000, 40,000 wages, which is charged here 40,000. So 1 lakh 11,000 fell for 71,000. X it is correct. Why we are getting so much? Why we are getting this? There is a provision. No, I forgot. See here. After providing a provision for bad debt, we forgot that. To provision for bad debt. How much they are telling? They are telling 5%. So they have given a debtors also. No, how much they have given, sir? Debtors they have given 30,000, 20,000, 20,000. 30,000, 20,000, 20,000. So upon that 5%. So 30,000 into 5% will come to 1,500. 20,000 into 5%, 1,000. 20,000 into 5%, 1,000. So this will fall by 1,500. That is 53,700, 52,700 it will be. 52,700. This will fall by 1,000, so it is 32,700. This will be 58,600. This will be 58,600. 52,700, 32,700, 58,600. Okay, sir, done. Give me a second. as wages are usually relating to direct activities. It is considered as direct expenditure, or it is considered as direct expenses. Okay, guys, tell me, is there any doubt in this question? Tell me, is there any doubt in this particular question, or is it clear? Is it clear? No, it's clear. Okay, fine. Oh, how did this line go? Take screenshot number 1. Screenshot number 1. Screenshot number 2. Screenshot number 2. Screenshot number 3. Screenshot number 3. Screenshot number 4. Screenshot number 4. Screenshot number 5. Screenshot number 5. Okay, fine. Is it clear, everyone? Is it clear? So that shall we proceed to the further? Shall we proceed further? Hello? Hello. Yes. Okay. What is, sir? What is next? Next it is interdepartmental transfer. Interdepartmental transfer. What do you mean by interdepartmental transfer? Goods is sent from one department to the other department. Okay, one department to the other department. Of course, we might be purchasing from outsiders also. Also, one department might be sending a goods to the other department. Okay, fine. When a goods or service transferred from one department, that is transferor department, to the another department, transferee department, it is known as interdepartmental transfer, and such transfer are considered to be as a purchases of the transferee department and sales of the transferor department, as I told already. Okay. In the transferor book, transferee will be the debtor. In the transferee books, transferor will be the creditor. Valuation of transfer. It can be done on the following 3 methods. 1. At cost. 2. At cost plus profit. 3. At normal selling price. Okay. See. Transferor department transfers goods or service to the transferee department at cost to the transferor department. That is, as in my example of yesterday's, 270 rupees or something, which we used to spend to produce the material. which was cost of Akash, which was cost of Akash. In that only we used to send 270. That is it. It is a price of goods transferred remains in the closing inventory of the transfer department. Then the creation of the provision for unrealized profit is not required, because there is no loading itself involved. There is no loading involved. When there is no loading involved, why you want to create or why you want to eliminate a unrealized profit? Whatever the profit is there, everything is realized, as closing stock is not contributing much towards unrealized profit. Okay, so done. Next is at cost plus profit. Transferor department transfers goods or service to the transfer department at a value higher than the cost. That is, yesterday I told, Akash will start sending materials to Anant at 270 plus certain percentage. 270, which is expenditure, plus certain percentage. Okay, sir. Hence, this is called as cost plus profit. Departments which produce or render intermediate goods or service usually follows this method to ensure that transferor department gets a due credit in the form of profit booking out of the such transfer. If part of the goods transferred remains in the closing inventory, transferee department, then the creation of the provision for unrealized profit is required, because your loading is there in the closing stock. You have to reverse that loading portion, right? Because you have added a profit element in sending a goods. Now whichever the goods you have sent, there is balance, which means the profit is not yet realized, but in your books you have already recorded it as a profit when you sent itself. So what you are going to do, you are going to eliminate it. Where? General P&L. Okay, so done. At a normal selling price, here what happens? Although they are working for the same organization, each department will send the goods to the other department at the same price in which it will give to the customers. I repeat, each department will send goods to the other department at the same price in which it will provide it to the customers, which means normal selling price. Okay. Transferor department transfers goods or service to the transferee department at a normal selling price, that is prevailing market price. Departments which produce or render marketable goods or service usually follow this method to ensure that transferor department gets due credit out of such transfer. Actual profit earning capacity remains undisclosed to the stakeholders. If profit of the goods transferred remains in the closing inventory of the transfer department, then the creation of provision for unrealized profit is required. Then the creation of reserve for unrealized profit, that is your stock reserve, is required. Okay, so done. Done. Have you people understood? Have you people understood this? Interdepartmental transfer, 3 methods, sir. Yes. Okay, fine. Give me a second. Okay, give me a second. Okay. I wrote a bit of notes. See here, transferred at cost price, cost plus profit, normal selling price. If it is sent at a cost price, no adjustment will be done for a unrealized profit, as there is no unrealized profit itself. Because whatever the closing stock is available in the transferee company, it is at cost price only. Because the goods which he is receiving is at cost price only. But when it comes to the cost plus profit, certain portion of profit element will be kept by particular department, that is transferor department. But from the broader point of view, that is from the organization point of view, if we look, what happens when the unsold goods is there in the other department? Unsold goods, I mean goods which is received from the transferor department is still unsold at the end of the year with our transferee, then there is no profit earned upon it, but actually we have already booked it as a profit. So organization as a whole, it is not booked. unsold at period end. So what we should do, we should reverse the loading. Create a stock reserve. Okay. Again, normal selling price also same thing. They might sell it to their customers, I mean to the departments at the same price at which they will sell to their customers, right? So they can sell it to the customers at the same price at which they will sell it to their departments. Okay, that is what normal selling price. And normal selling price also profit element will be there of each department, and if that goods is unsold, then the booked profit should be reversed in a organization as a whole. So where we are going to reverse it? We are going to reverse it in the general P&L of the organization. Okay, fine. So is it clear? Is it clear, everyone? Yes, fine. So some based upon this we will see in the next session. Next session will be after your law class. I will let you know once your law class ends. Basically it is something like this: if law classes ends within 1:15, then after break of 10-15 minutes we are starting. If it is goes beyond 1, then after taking 40 minutes of lunch break we are starting. Okay, I will let you know in the group. Bye bye.